Here on the Colour of Country Life, great to be chatting with Rabobank's Stefan Vogel. How are you today, Stefan?
I'm doing very well. Thanks for having me.
It's always a pleasure to chat with our friends at Rabobank and always good detailed analysis. You've been tracking for our farmers what's been happening in the Ukraine conflict insofar as it affects, I guess, not just prices farmers are getting, but also input costs as well.
Absolutely. So maybe we start on the output side. So what's happening in the grain space is the big question, and you need to look where these guys are in Ukraine right now in terms of the progress of the crops. So winter crops have long been in the ground even before the war started, but we expect that some of the area will be abandoned just because of war activity, because of unexploded mines and things like that in the fields. So there's quite a bit of risk to the production of wheat, especially also now that the crops have come out of dormancy from the winter and are now starting to grow. They need fertilizers and chemicals. There's a bit of shortages for some of those products. There's a bit of shortage also of fuel. Here and there you have labor issues when some of the farm labor had to move and fight. So with that, there is plenty of issues, and we expect that the crops both for wheat are declining, but even more the crop of corn is declining, because corn is one of those crops you usually plant in April and in May. And the decisions there the farmer have to take is not all the challenges only that I just mentioned in terms of war activity, but it's also around how can you market your goods once you even be able to harvest it. So the bottleneck in the whole industry is the export infrastructure. And if you look, all of the ports are closed so far, which means if you want to move grain out of the country, you need to do it by rail, by road, and that is much, much, much more restrictive than getting it through just the port channels as they've done it usual. So you need to imagine basically a situation. Ukraine's exports are roughly twice as big for grains and oilseeds than they are for Australia in this very good season, and you can't handle anything through the ports. You need to go on rail and road, and that is the real bottleneck. So we are even more pessimistic than the U.S. government, which last week came out and said, well, they're going to reduce exports by about 45% from the previous few seasons. We think it will probably be even a stretch to get anywhere close to that number, because if you look at the exports here in the month of April, they just made it to 1.1 million tons of grains. And, well, take 1.1 times 12, you're ending up close to 15 million metric tons. So getting above 20, getting closer to 30 million is a real stretch in our view. And so with that, the good news for the Australian farmer is probably demand for grains will remain high around the world. And with Ukraine facing export challenges, people will come over to us. On top, you've seen India last week restricted their exports, so less volume coming clearly from there. The U.S. is facing dryness in their wheat belt, in the winter wheat belt there, and the crop tour is just moving around that area and is also seeing that the crop is one of the most challenged they had in a long time because of water stress and dryness in the region. So there are a lot of issues in the wheat market, and that should encourage people to still come to us in Australia and ask for our grain.
Yeah, no farmer will take any joy out of being, I guess, a beneficiary out of a humanitarian crisis and poor climate conditions in the north. But I guess it does touch us, these challenges, when it comes to our input costs.
Absolutely. I mean, it touches us on the input cost side. If you look, fertilizer prices are already very high. Even so, urea has come down in the last few weeks a little bit. Overall, we think that those fertilizer prices will remain elevated. If you look, Ukraine itself isn't a big exporter of fertilizers, but some of the fertilizers are exported out of Russia, usually through the ports in Ukraine. Clearly, that is not happening anymore, so that is a bottleneck. But also, if you look at Russia and Belarus is that one country just north of Ukraine where a lot of the Russian troops were standing in the beginnings, and then when the war started, they moved just down towards the Kiev area. So with that, Belarus has faced already sanctions well before the war started from the European Union, and it makes it just more difficult to get fertilizers from those regions on the world market. And if you think, well, Belarus is a landlocked country, very important for potash exports, and the easiest way to get it out of that landlocked country is usually to go just north into a European Union country there, put it in an export port and go to the world market. However, with the sanctions that the country is facing, you can't import any fertilizers anymore into the European Union from Belarus. So they now have to do a detour, which makes their trip twice as long into a port of Russia and go to the world market. So we are fearing on the one side for still continued high prices on many of the fertilizers. But also if you look at energy, we all see how expensive diesel and petrol is over here in Australia. But if you look at the importance of oil coming out of Russia into the European Union, there is the next sanctions just happening. As we speak, the European Union is working to get independent from Russian oil imports, and they are trying to get that done rather quickly. There's a little bit of opposition from some member states who heavily depend on those imports and fear they can't get the oil from somewhere else. But it seems like the European Union is working out a way. And if you think that through, what it means is, well, if the European Union doesn't buy in Russia, they will buy somewhere else. And so that should naturally increase the global price for oil. So if you look at the $100+ we are paying these days for crude oil already at the global market per barrel, that may has to rise further, which means also our prices here for diesel, for gasoline might get even more expensive down the road in Australia.
Yeah, Stefan, I've also heard that chemicals, there is a decent amount of farm chemicals that come out of the Black Sea region. Is there some truth to that?
Well, a little bit, but I think the bigger problem on the farm chemical side is usually you need to look at China, and China is a major exporter in the chemical space, a major producer also. And what we have seen there is maybe not so much on the war impacting the whole supply chain, but it is the lockdowns in China that are causing quite a bit of issues. Because if you see right now what we face around the world is that in the container shipping, 1 out of 5 containers is just sitting in front of a port waiting that vessel can finally enter the port and people can load or unload those goods and those containers from the vessel. So there's a lot of issues with the supply chain, and China is making things worse, clearly, because with the lockdowns we have seen, and they had locked up, for example, a city like Shanghai, a major city, and that is the largest container port in the world. So there's a lot of issues that have gotten even worse in the container business with those lockdowns. And if you look at China, we expect that throughout this year they will have to continue the lockdown policy because the vaccination rate in the country is not anywhere close as strong as it is here over in Australia. The medical and healthcare system is not as good to treat a lot of sick people. And so I think China will probably have to go through 2022 with a lot of lockdowns. Then they try and open up again. Then there will be a couple of cases. And they have this, what they call dynamic zero policy. So they really try to get very active as soon as there are a few cases. And so with that, we expect more issues throughout 2022 in the supply chain happening from those lockdowns in the different Chinese countries. And at the end of the day, if you look at the overall situation in the container market, we fear containers which had increased already over the last 18 months because of COVID and gotten to about 5 times as high the container index than usual last year. It has come down a little bit, but it's still more than 4 times expensive, the container index. And to unwind all those issues, we fear it's going to be a longer business. It's nothing that happens just in 1 or 2 seasons, so we're going to have to probably deal with it for more than a year.
That's fascinating stuff, Stefan. If people want to know more, they could get in touch with Rabobank. I think they can get on your mailing list and get some more of that detailed information from you. Is that right?
Yeah, absolutely. We're doing a lot of research for our farmers, so clearly all of our farmers that we're financing are more than happy to reach out to us and get more insights from us.
Very good. Thank you very much for joining us today on Flow.
Thank you very much. Bye-bye.